Good afternoon, everyone, and welcome to the Lender Lounge. I am here with Hannah Shifflett and Amber Dowdy. They are actually in our Roanoke, Virginia area for where our corporate office is located. And just want to throw it over to them and let them introduce themselves and tell us a little bit about themselves. Hannah, you
Um,
want to go first?
I certainly can. So I am Hannah Shifflett. We're both based out, like you said, out of the Roanoke office. I've been licensed in 14 different states. It's soon to be 16 once I get Texas under my belt and everything. But really just kind of strive to help homeowners get into their homes and help them save money at the end of the day.
Nice.
Good feat. My name's Amber Dowdy. I'm also, in Virginia, working alongside Hannah. I've got, just as many licenses, and we're constantly growing, in the department that we're in. So we're constantly looking for new opportunities to get more states and kind of expand that horizon and reach more people. And like Hannah said, just really change their lives and help them along the path of homeownership or refinancing or, whatever financial goal that looks like for them. Super excited about it.
That's great. That's great. And I mean, hitting 14 and 16 states, you definitely have your pool of, clients that you can work with. So that's awesome. I personally have 10 states myself. I started really hot and heavy in a call center, started out basically with a broker, and they put me in the Boston market. So my days were spent talking to a bunch of guys in Massachusetts traffic, screaming, "Get out of here!"
Oh no. I bet
Northern
that'd be
accent.
fun.
It got to the point where people couldn't even recognize that I was from Georgia because they're like, "You don't have that twang." I'm like, "Well, I'm talking to guys from
Yeah.
Massachusetts and Maryland all
Yeah.
day."
Yeah. I'm sure it like blends into like yourself and you kind of like,
become that person.
yeah.
Oh
Yeah.
yeah,
Like,
yeah,
not
and I mean, I'm
camouflage,
sure
but
y'all have seen the difference in
mhm.
accents. I'm
Oh,
sure.
Yeah. Yeah. With the different states from Texas to like New York, it's a vast variety of, different people. And for me, it's awesome getting to know those different types of people because, you come along all different walks of life and people in different stages of their life. And, it's awesome to, we're from little old Virginia, a little small town. So it's a different, world out there. And it's pretty cool to just get a
yeah.
glimpse of it, even through one phone call.
We're putting Alcova on the map.
Yeah, yeah,
For sure.
exactly. That's the game plan.
Yeah.
So they know
Well,
us and we know them.
Yeah.
go ahead. What?
I was just say, so they know us and we know them.
Right. Yes. Yeah, and with mortgage rates are a little bit higher. They're starting to improve today. The markets are in good shape today. Have you seen buyers step back, or are they still, I seem to see that whenever the rates go above 6.5, it gets slow. Have y'all seen the same thing?
I would say so, but once we get them on the phone and kind of explain like the rates are probably never going to go to where you want them to be, like in the threes and fives and everything. It just doesn't, it's probably not going to happen ever again in our lifetime.
Yeah.
Yeah.
So the best way I can explain it is that you never know what the rates are going to do. It's an unpredictable market in any standpoint, and you can't, go through life and put your life on hold waiting for something to happen. If you want to buy that home or do that refinance or whatever it looks like, you can always buy the home today, refinance later if the rates drop, and then but you can't buy yesterday's house at yesterday's price is the best way to kind of explain it. So
That's how I explain
yeah.
it too. I tell them
Yeah.
they can't get in a time machine and pay last year's
Yeah.
prices.
Right.
It does not work, unfortunately.
No.
But if they do make the time machine, I would love rights
I'd
to that
love
as well. If
that.
you could just share that information, that'd be fun.
Well, and I'm not going to age any of us, but I'd love to go back to the 80s before they had cell phones and documenting
Yeah.
everything.
Yeah, but I feel like back then, you didn't have the noise of social media and people are so, keen to follow what everyone else is doing or, what they see on social media. And it's just like there's so many things out there that are just not true, in regards to that as well. So
Well, and that's something that we actually were discussing before the call. And so, I would love to go over some mortgage myths because I've been hearing
yeah.
them a lot lately. So who wants to start? Let's talk about one of the most, your number one mortgage myth that you hear.
I mean, I think that number one that I at least personally hear is just that they can't afford a home. They think that buying a home is unaffordable. And there's so many different affordable options out there, whether it's a down payment assistance or it's getting help with closing costs. Like you can make a home affordable and in your price range per month.
Yeah.
So I think that's like the number one reason of why I get people trying to back out because they think they don't have the money or they don't have the savings.
Yeah.
Yeah, I would definitely agree with that. That's probably the number one
Yeah.
that we deal with on a daily basis. And it's just having those conversations with them. Like we do have access to resources and, you know, you can be a homeowner. If you fight the good fight, we'll get you to the closing table.
That's right. Well, and I don't know about y'all, but I've actually surprised people because somebody would call me and say, oh, my credit is not, where it needs to be. I can't do this. And then you're like, well, let's just take a look. It's really a myth that your credit score drops dramatically when a lender pulls it.
Yeah.
The CFPB actually came out many years ago and said that a hard pull for a mortgage inquiry is 0 to 3 points on your credit report. So subsequent pulls in a 45-day window do not count against you. So you can shop. But a lot of people do not think that their credit scores are good enough. And then I pull credit and I'm like, not only do you have over 600, but you're qualified for USDA. How about we do 100% financing?
Yeah.
So it's awesome. And I have ADHD. I know I do, but I love the fact that this job is never the same every day.
Yes. Mm-hmm.
Do y'all like that?
Yeah, every day is a school day, for sure. You never stop learning, I feel like, in this environment. And phone call to phone call, there's a different scenario in every aspect. And,
and everybody's so different too.
Yes, yeah.
And what they were doing and how they want to get to their end goal and everything.
Yeah. It's, you work with first-time homebuyers, they're in a completely different stage of life than someone who's an investor looking to buy their fourth home.
Yeah.
Or, the repeat buyer that's moving down because the kids have moved out. A lot of times I get a little pushback from people who last did their loan before the crash. Now, I'm old enough. I've done this long enough that I was in the mortgage business when the market crashed, and a lot of people thought, well, I can afford it on paper. I've got good credit, so I should qualify. And one of the biggest things, and I'm not sure if y'all hear this, is I pay rent of $2,000 a month. Why can't I have a $2,000 payment?
Yes.
Yep.
Yeah, it's very repetitive, and almost every renter that I hear from is like, well, I'm doing it now. Why can't I, do it in the home front? And, with that in mind, it's not just, with renting, you're only paying for that rent. There's no taxes, homeowners insurance, you've got your renter's insurance, and things happen in life that you can't control, and your landlord fixes those for you. But, getting that home and making those payments on the flip side yourself, you're creating that equity and building your future, your finances as well. So, and just on the topic of renting, would you rather pay someone else's mortgage or your own?
Absolutely. That's one of the biggest ones that I use. And that for homeowners are 40 times more wealthy than a renter.
Yeah.
They have more household wealth. And, if you think about it, the real estate industry is how most people have built wealth for generations. Oftentimes they're handing down the equity given, when they pass away. I'm seeing it, and it's actually very helpful. If a parent really has the ability to gift their child some of their inheritance funds now, gifting that inheritance fund a little early so they can actually buy into the American dream is a huge benefit that, maybe when they're, 50, 60 years old, if you pass, they may not need that money. Let them make use of it now where they can gain appreciation on that money rather than waiting until, they're in their 50s or 60s.
Yeah, and I don't know anybody that would want to pack up and move in that age range anyway. So if it were me, I'd, start young and build that wealth, just like you said, day to day, year to year. And what I tell my clients and borrowers all the time is your house is your biggest bank account.
Mhm.
Essentially, you have so many options being a homeowner that a lot of people don't even recognize that they have, out there.
Absolutely. You get into a bind and you have that equity. But, one of the biggest benefits that people think about taxes, we are taxed to death. They tax us even
Yeah.
after death.
Yes.
But there's one benefit of being a homeowner, and that is capital gains. You are allowed to walk away with up to 250 per individual or 500 per couple, and that is tax-free money. Cashing out on properties can also be tax-free money
Yeah.
because you're taking the cash, but they're not taxing that money.
Yeah.
So, utilizing your equity is only as good as your use of it.
Yeah.
If it's sitting there, and I saw this example during the crash, when people were sitting on, well, I owe 125, but my house is worth 250. Well, when the crash of '08 came, their houses were now worth 125. And so their equity was, they had 100% loan to value.
Yeah.
When the values change, that equity gets eaten up, whether you're using it or not.
Yeah. I think, and I've heard a lot of comments, especially individuals who went through that, they're almost afraid to even try accessing that equity. I'm like, I promise it's a safe space now. It's changed. It's okay. You can take the jump. I'll catch you.
Right. That's awesome that you say
Yeah.
that. I mean, because they think it's really a very high risk.
Yeah.
But the pendulum swung the other way after the crash. And there are checks and balances on every loan that is done. Now, there are no income verification loans, but you're going to pay a high rate and a very hefty down payment for that risk.
Yeah, I would definitely say. And it's even everything surrounding the home process is, there's less leniency, I guess you'd say. And, they're not going to put you in anything that's a high risk. And because no one wants to see you fail, as a borrower, I especially don't, just being an LO for my people, I don't want to see them fail. So, covering every avenue that we can to get them to that next stage is high priority for sure.
Yeah. Well, and taxes and insurance are what's driving up payments for most people in HOA fees. So I I'm really hoping that Congress can come to an agreement and really pass I mean, I doubt it's going to be on a federal level, but if we can eliminate property taxes for primary home buyers and
Yeah.
homeowners, that would make it so much more affordable.
And people would be able to qualify for more too.
Yes.
So they could get into a house maybe they actually dream of having versus what they have to have now.
Yeah.
And in case people don't know, we here at Alcova, we do not do smoke and mirrors. We don't lowball your taxes and insurance so that you're buying too much house. There are some builder lenders that have lawsuits pending for doing this. They were basically getting you into a more expensive house because they were under quoting the taxes and insurance. And then year one, the buyer would get the surprise of their life when their taxes are really 6,000 instead of 1,000, and their insurance is 2,000 instead of 500. And that actually drove one of my past clients to sell his home and go live with a family member because he could not afford the taxes and insurance on a fixed income anymore.
Yeah.
And speaking of fixed income, we see a lot of those people, and being able to get them in a house comfortably, because there's no overtime with that type of income. You don't get bonuses or anything
You
there.
get what you
So,
get.
yeah.
And you're lucky to get a 3% cost of living increase every year.
Yes. Yeah, very true. On that aspect. And even with that, if you get the increase, it's because things are increasing to pay for. So being able to help them, specifically is an awesome feat. And like you said, we don't do anything like that, like overprice or underprice anything.
Yeah.
I would much rather have a cushion for you to fall on than the opposite. So
Absolutely. And that's how, companies and loan officers get a good name in this industry, and how they quickly get deemed, the rumor of being a bad loan officer is, how is the experience? And when realtors are getting calls a couple months after closing because something wasn't done because the loan officer, fibbed on numbers, or the tax bill comes out, I'm the first person that they call, or the realtor, when they get that tax assessment and their payment's going to go up. Um, so, we are accountable to the communities that we serve. And a lot of those, fly by night companies in Iowa, they're not looking out for your best interests, because they're really just, focused on numbers, getting as many loans as they can churned. We see every single person as an individual, not a file, not a number. And that's one of the things in this industry that's always driven me crazy, is that, when you see people posting about their top producer, they put units. And I'm like, oh, 17 units? I mean, can we get any more tacky? Yes, they're families. There's 17 families they helped. So, I definitely agree with you there. What's some other mortgage myths that y'all have heard?
Really just not being able to afford it is probably, the most one. Believing things on social media, or waiting for the quote unquote perfect time. If it be the rates or just something they have going on, they think that buying a house is like the most stressful thing, and it's difficult and it's impossible. And it's not, if you have someone behind you like your LO helping you through the process. And we are here to be that financial advisor, to be the person you lean on when things do get stressful, and take things off your plate as much as we can. Packing a home and everything, that part is stressful. I can't help you pack your home, but
Right.
if I could. But taking that ease off of them and the stress in any way, I would say would be another thing that we deal with. Is we get a lot of people, like Hannah was mentioning earlier, that are just, I guess, concerned of the next step. Yeah. And they're unaware of how it works. So it's scary of the unknown.
Well, and I don't know if, some states may still have it, but civics class, how to write a check, how to balance your checkbook. A lot of that stuff is not taught in schools anymore. And I really, a couple years ago, I was so antsy to start a program for high school kids on mortgage and buying a home and, credit scores, because these things are not talked about. If I did not have a financially responsible mom that helped me get my credit scores in order and co-sign for a car, I would not have the credit that I have today. And there are, there's professionals out there, depending on the state, there may be limitations on who can do credit repair. In my state, for example, Georgia, you cannot be credit repair unless you're a lender, attorney, or nonprofit. So those credit repair companies cannot touch clients in Georgia. But that is why I learned everything I can about credit scores and algorithms. So, if you were to get in contact with Amber, Hannah, or myself, we're going to be able to look at your credit, but we're also going to be able to tell you ways that you can get those scores up. Yes. That is important, because your credit score goes into what rate you're going to get, what programs you qualify for. Virginia Housing, that's a big program for, Virginia. They have, a minimum score. They have a max debt to income ratio. There's different caveats that go into each program. So a lot of times I get people who want to do a down payment assistance, but we need a higher credit score. If you get with me and you actually listen and do the things that I tell you to do, your credit scores will go up and you'll be able to come back. The caveat is half of the people don't do exactly what I say. And that's, I can lead you to water, but I can't make you drink.
Yeah. I was just going to say the same thing, is in having those difficult conversations, and like, it's not you're never going to buy a home. It's not right now, but here's the resources. I think that's something that Alcova in general prides himself on, is we want to help you in every stage. You know, if you want to buy a house right now and it doesn't seem feasible, we're going to give you the resources so that you can in the future, you know, get to that next step and finish your goals, you know, and get there as well. So,
I mean, you touched on it too. Like, we're not just loan officers, we're financial advisors. Like, we're going to help you whatever step you're in to get there as well.
Yeah. Well, and you know, building credit is one thing, you know, with younger people, a lot of kids coming out of high school, going into college, they're tempted to take college loans. You know, secured credit cards are one of the best ways to build credit from the beginning. There are different websites, different secured cards and fast reporting cards that we can refer you to. You know, there's a lot of education that goes in, and like Hannah was saying, when you think you know everything in this industry, and then the guidelines change. So I'm like a walking, like I'm a walking encyclopedia. People call me for guidelines. They call me on how do you work this system or that system or put this loan in. And I know all that, but when something changes, it's like trying to knock out, you know, that thing that's drilled into your brain. You know, when we went from and this is an overlay, obviously, USDA would accept 0 scores with alternative trade lines, but we cannot. So 600. But for the longest time, we were at 620, and I kept telling everybody 620, and then I'd go back and, oh no, it's 600. So even if you're doing this, you know, 24 years like I have, it's still, you have to refresh your memory, and they're adding new programs all the time.
Oh yeah. Yeah. I think we get a new program list like every month. It seems like, oh, here's a brand new shiny new object. And, you know, it is something you have to learn, and because you want to be able to present that to the individuals, it's going to help. So it is constantly learning, you know, every single day.
Well, and were y'all on that call last week about the renovation HELOCs?
Yes.
That was a lot. I had to go back and rewatch that one. Yeah.
Yeah.
I mean, it seems like a great product. You know, I actually had someone yesterday that I probably could have used it, but it was an investment home and they don't do investment. But then I've got another buyer that we're going to have to do a no income verification loan because her self-employment does not allow her to buy in the state. But what I thought about doing is, because it's her primary home, go behind it with a home equity line from that reno and be able to use the ARV, the after renovated value, to get her a better rate on that HELOC than we would have if we just went straight on the home equity line.
Yeah. I mean, it's a wonderful thing, because a lot of people, if they did buy a home 10, 12 years ago, they don't want to touch that current mortgage, but they also want to renovate their home. So like, it's a wonderful product with the home equity lines of credit, or the renovation ones too, that you're able to do so much more with it.
Yeah.
Absolutely.
And the best way I can explain like a mortgage is it's like a puzzle. Like, you can there's different ways to get to what you want. And there's so many different options now, like the HELOCs and everything. Like, you can do this first step, get that completed, and that gives you what you want. And then once that's done, you know, maybe refinance or do whatever. Like, so there's different ways to get to the cheese and the maze, I guess you'd say.
That's right. That's right. Well, and you know, there's definitely different ways to structure a loan. And I've had plenty of people come in and they are, you know, looking at, I want to put 20% down, or they have the myth that they need to put 20% down. So then we have a conversation and I'm like, well, you have 3 cars that equal $3,000 a month. Okay. And those cars, we could actually pay those off. And you put down 5%, take mortgage insurance, and now you're saving $3,000, and your mortgage payment is only $200 higher than it would have been if you put down the 20%. Those are different things that if you go to some fly-by-night internet lender, they're not going to know how to structure the loan. They're not going to look out for your best interest, and they're going to sell you vanilla. You want, you know, vanilla, that's what you're going to get. With somebody who does have all the investors we do, we have over 40 investors. We fund our own loans, but we know we have options outside the box. So, you know, working with someone like Amber, Hannah, or myself, you're actually going to be able to look at, okay, here's one way we could structure it, but here's a better way. And this is,
Yeah.
and why is it better? A lot of times I have people who are qualified for conventional, FHA, and USDA. I show them all three options and I'm like, hey, you can do 100% financing, but USDA is going to limit you to 300,000. Conventional, you could go to 380, but the rate's higher. The mortgage insurance is cancelable. Or we could go FHA. They'll let you go to 420, but your payment's going to be higher. So, I like to show everyone the options because it's their life, it's their, lifestyle, their family, and they know they know the goals they want to reach. I show them how they can get there and they choose the path.
Yeah.
Yep.
I would say you give them the options, and we kind of do the same thing. Sounds like we follow the same like sales process essentially. So you give them the best options that are available and give them back the driver's seat and which way to go. And I think it speaks volumes to you as an LO and anyone else that follows that same path, is like, you have this object and here's what you want. Like you said, this is what you want, but you also have this available. And I think a lot of people think that they only have one option and that's it. And I think that might be, why they're kind of deterred from shopping, buying a home or refinancing or doing that HELOC or whatever. They don't know how broad their horizons can be, and being able to show that pretty awesome.
I want to bring up another very important point that you just brought to my mind. So there are some big banks that are also depository banks that will pre-approve you for something. And I had a case where the woman was pre-approved. She was pre-approved with 10% down. She ended up having an emergency come up and some of that money got spent. So they did not counter her at 5% down. All they did was deny the loan.
Oh no,
that's so sad.
There's always so many different options. I mean, I always tell my people life happens.
Yeah.
And even when you're in the home buying process, something's gonna happen.
Yes.
And that's why I always like to keep a little bit of your extra reserves of your money. Because there's no reason, like you say it a lot, there's no reason to go house broke.
Yeah.
Or any of those for that situation to not happen. Like there's always different ways to get into your home.
Yeah, definitely. The one of the other ways, myths that people don't know is that a lot of people, number one, don't even know they have a 401k, which is sad. I'm like, do you have a 401k? They're like, no. And I'm like, I see deposits going in.
Yes, you do actually have one.
So one of the best ways, there are down payment assistance programs, but not everybody qualifies. Sometimes it might end up costing you more. Like in Georgia, we have, repayable down payment assistance. But, if you have forgotten that you have a 401k, look into it, because your 401k allows you to take what's called a hardship withdrawal for a primary home. And you are not subject to the same taxes you would if you took out early penalty for any other reason. So a lot of people forget that. And if you are looking at a home, it might mean the difference between qualifying and not, because if you forgot and the loan officer doesn't decide to dig and look at your pay stubs and see that you have a 401k, they're not going to bring it up and you're going to be, oh, well, I don't qualify for down payment assistance, so I'm toast. I can't do anything. And that was sort of the attitude that woman had, that the big bank had turned her down. They literally did not counter the 10% down. They just sent her a denial letter, and the denial letter had a bunch of check marks like did not qualify, credit score is not sufficient, debt to income not sufficient. She couldn't figure out what the real reason was. And I said, listen, I don't know why. I will just tell you that if you want to apply with me with the 5% down, I'll see if you qualify. She not only qualified with 5% down, she qualified with 3% down under Home Ready. And I was like, so she basically realized that this big bank, instead of countering her and saying, yeah, we can't do that, but let's do this, they just flat out denied her and just sent her on her way after her appraisal and her inspection were done.
Oh no, so she already spent money on it.
So close.
Yeah.
Oh yeah, she was like 2 weeks out from closing. So we ended up getting it done and we closed on time, but that was a rush closing,
Yeah.
Most typical closings are 30 days.
Yeah.
Yep.
That's not rushed, and if you're doing some kind of weird program or down payment assistance, sometimes it can be 45 or 60.
Yeah.
Um, but don't expect us to, if you're going to come to me to save your deal, there is only so fast I can go. So, bear with us if you need someone to save the day at the last minute. But even guidelines require disclosures. You can't close before 8 or 9 days anyway because of
Yep.
disclosure rules.
And I think just walking the borrowers through that process, because like for your example, she had no clue what she was looking at, numbers in a box and checked, just walking them through, that process of different options or anything, the closing disclosures, like you mentioned, or their loan estimate. A lot of people don't, they're not familiar with the mortgages, and how it looks on paper is not how it can translate, to understanding. So just walking step by step, is better for them.
Banks will tell you that you're going to be putting down 3%, and then you find you're bringing 6%. And it's because there's 3% in closing costs. The seller's not paying.
Yes. Yeah.
A lot of people find out at the very last minute. And that's why, I'm the rare bird. I'm the weirdo that sends a worksheet with every pre-approval. And
Yeah.
Oh yeah.
might be wrong of me to do, but I don't want to set the wrong expectations that 0 down means you're bringing 0 money.
Yeah.
Yeah.
And I think
You know?
like what I at least do is when we're going through those options that you have all of these different programs for you, it's really talking about the extra fees associated with that too. Of it's not just your down payment, it is your closing costs that are with it as well. If we
And
can't
the
get
escrows.
covered, right?
Yeah.
Like it's what those costs actually look like, so they're not scared when they see $10,000, $20,000 on their loan estimate that they didn't account for.
Absolutely. And that is the number one complaint I hear from realtors is they did not set the expectations. They had no idea. And I just worked with a realtor last night. She pulled out the loan estimate. Can you beat Navy Fed? And I looked at it. It's one of those no MI. It's got a very high rate, but it comes with a lot of fees. And they had no idea that the property taxes on this $450,000 house were expected to be $8,400 a year, which is like 2%.
Yeah.
So when I go to look at it, I'm like, where are they buying again? And she's like, oh, it's such and such. Let me text the builder's rep. And builder's rep promptly replied and said, yes, taxes in city and county are about $8,300. So now the buyer is looking at possibly backing out.
Yeah. That's a big change
Yeah.
to what I'm sure they thought they were going to have to pay.
And she just found out about 5 days after she signed the contract what the real numbers are. And she's already given a deposit, and they actually asked her for a 10,000 additional deposit. That's when she said, let me look at these, what's the expectation? What's my cash to close? And she asked me, well, why is she bringing 18,000? And I said, well, she would be bringing 26,000, but they rolled in the origination fee on top of 100% financing. So now she owes 478 on 470 purchase price. Better hope the rates don't go down and she wants to refi, because she's going to be upside down and calling me saying, why can't I refi?
Yeah. And that's what we don't want. We don't ever want to feel like they're trapped in something. Like when you find a home, it moves pretty quick as far as, that 30 days goes by very quickly.
Oh, yes.
I'll tell you that. So, I mean, these people are out there spending money on a dream that they have, and to have that crushed is just not something that we ever want to do. So, like you mentioned, you go through the options with them. Part of going through those options is covering every detail, so you know exactly what you're getting into with, buying a home every step of the way.
Well, there's another large lender that I will not name, but they basically have a 35% fallout ratio because they use AI to pre-approve their buyers.
That's crazy.
Personally, I mean, I don't know. And this is something I just started doing during COVID. It actually went really far, and the listing agents have really commented on what I'm doing. But when I pre-approve a buyer, I am doing a video letting that listing agent know, and I don't make it specific to the property. I know some people do, but I say, listen, they are so excited to make an offer on your home. I have 24 years in the business. I don't write a pre-approval I cannot back. I've looked at their income, their employment, their assets, everything. I've done preliminary underwriting, looked at their credit report. Everything is good. You don't have anything to worry about. We hope you'll accept their offer. And that's it. And I send it to them in a text, and they're like, oh my gosh, this is gold. I'm going to send this with the offer. And it really goes up, far, because the listing agent appreciates it. And another thing that the listing agent appreciates is when they get the offer and they call the loan officer to get a good feel for, have you done your due diligence, and the lender doesn't pick up.
Ooh,
That happens a lot. And if you don't know the number, that's one of the lessons I learned long ago. It might be a spam call. It might be somebody trying to buy your home, some investor, but answer the phone, because you might be missing out on something pretty big that's, calling.
Yeah. And the process that we follow, we do have a strong connection, or try to make a strong connection with that realtor, because like I said previously, you want to take as much stress off your borrower as you possibly can. And just being that middle person, between you and the realtor, and having that connection with them. If they go out shopping this weekend, the realtor can say, hey, I need a pre-approval for this amount for this house. Plop it out quick, fast. And the buyer, your borrower, doesn't have to do that. Mass amounts of stress left off of them, So.
And that's why, I will work with any realtor, and I invite any realtor partners. If you would like to work with me, send your buyers my way. I would love to work with you. I'll make you look like a rock star. But that when communication is paramount on transactions between the agent and the lender. And there are some things that I cannot tell the agent. I cannot tell the listing agent. I can't tell anyone their financial situation, how much money they have down, what their DTI is. I can't be divulging your private laundry with everybody. We can't even share the appraisal report unless it comes in short. That's the only time we can share it with the selling side. So, it comes down to working with someone who can explain all these things. And I've forgotten my train of thought. I've just lost it. So y'all go ahead and pick it up. What was that?
I said there goes the ADHD.
I know, or it's perimenopause, one of the two. Who knows?
It happens, but like I'll agree with what you said, just the communication aspect of it, and walking them through it, not just getting numbers on a piece of paper and sending that to the borrower and hoping that they figure it out. I'll see it at the table. It's just not something we do here at all.
Yeah. And, contingencies. There's a lot of contracts that have contingency to sell. And if the agent and the lender are not working closely together, the lender may lock the loan thinking, oh, we're closing, but there's an extension on the contract that nobody told anybody about. It's not the buyer's responsibility. It's really up to the lender and the buyer's agent to communicate and stay in touch. And unfortunately, because things got so slow, a lot of agents and realtors have gotten other jobs where they're just not paying much attention to the contracts that they have. And there's some that do it great, and you don't miss a beat. But there are some that you don't hear from until 7:00, and it's because they worked 9 to 5 somewhere else.
Yeah.
And I feel like that is a disservice for that client, whether it's the seller or the buyer, because they are not able to answer in a timely fashion. A lot of times they don't answer until the weekend, and by then my underwriters are not there.
Ooh, yeah. I would definitely say, like you said, just pick up the phone. Like that makes a drastic difference. Obviously we're all in meetings at some point, but call that borrower back, get them on the phone, call that realtor back, get them on the phone, because things can change in a heartbeat with anything, refinance a HELOC, anything, buying a home. So staying on top of it and staying organized, that definitely helps me. I also have ADHD, so
there you go. Well, that's why we try to get along so well.
Yeah, exactly. Just staying organized the best you can is only going to help your borrower and help them reach their goals. And that's my ultimate goal. I don't know, Tana's too. So, and really anyone in this position, we do it because we care about the people that we're helping in their life.
Well, the other complaint that you may not hear about, but maybe eventually you will, but I used to be on with the chairperson at the affiliates for Association of Realtors. And one of the biggest complaints is so-and-so's out playing golf, or so-and-so didn't call me back for a week. And it's the loan officer, and they just don't think it's a very big deal or important to call the realtor back. And they don't understand, but that communicates to the buyer, and they have a sour taste in their mouth because you felt like it's more important to be out on the golf course on a Friday than to deal with an amendment that came in that they need to get changed, and that's one thing that, I used to, when I first started in this industry, I thought I was the coolest thing since sliced bread. I took Fridays off. I didn't work Fridays. And I tell you what, let's see, I've been doing this 24 years.
Fridays.
Yeah.
Fridays are my busiest day.
Mm-hmm.
Fridays.
Yeah.
What?
Fridays are the bumping days. They're moving.
Yeah. And Mondays are my second busiest because I'm catching up from the weekend.
Yeah. Mm-hmm. And I would say, like most people, like you said, a lot of people are at work, 9 to 5. They don't have the time to go look at a house or do whatever. So they're out on the weekends. So, maintaining.
Texting at 8 o'clock asking for a pre-approval on a work.
Yeah. I had one on Saturday at 9 p.m. and I was on my laptop. We might clock in 9 to 5 Monday through Friday, but it's not. Yeah. Yeah. And it's rewarding to be able to help them. Like, I will get up out of my bed in my PJs at 9 p.m. and turn on my laptop so that you can get this house. You bet your bottom dollar I'll do it. Yeah. And just being able to get them to that next step. And even through that process, like you mentioned, like some LOs, won't call a realtor back because they're doing X, Y, and Z. Well, I feel like my job doesn't stop just because I've issued that pre-approval or told you could refinance. And even then after the closing table, even if your loan gets sold years down the road, you go somewhere else. If you get a tax bill, you call me, I'm still there to help you, like that financial advisor. So It's not just a one and done, aspect.
Unfortunately, all servicers have very, those people who answer the phone have minimal experience. They don't really know the ins and outs of your mortgage specifically. Yeah. And that's why I put in my closing email that I send out the closing disclosure. I say, listen, we are either going to service your loan or we're going to move it over to one of our 42 servicers we work with. This does not change my relationship with you. If you have an escrow shortage, call me. If you have a tax bill, insurance question, call me. I'm there for you long after closing. And that really will go to show when, the kids of the clients that you helped 5 years ago are now calling you. It's because of that communication. It's because of you answering the phone. Because I would say, I'd like to think it's lower than this, but I would say 75% of people in this industry are in it for $1 and not for the people. And when you find that, 25% person that is in it for the people, like you, me, and, us three are, that is the person that will be your lender for life, because they will tell you, no, this is not the smartest thing for you. You should not do this. When the internet lender is going to say, but you're going to get 10,000 cash out. No, I'm taking 3 points higher in the rate. Come on, let's get real.
Let's break that down and see what we're actually doing. But like you said, some other lenders compare it in number of units, but they're families. Like you said, it's generational. It's people. They're trying to buy a home. They're trying to get out of debt. And if you view it that way, it's just an extremely rewarding position to be in, to be able to guide them through that process and get them from point A to point B.
Happy tears at closing is one of the most emotional things for me. And I had a woman going through it. She was in the middle of a very abusive divorce, and the hug she gave me, it's been 12 years and I still remember that hug. I almost got knocked off my feet. You know, it was like, you don't understand what you've done for me. And she's actually a realtor now, and we're partnered. We do, deals
That's
together.
good.
So
Yeah.
it's a pretty cool full circle, Did a loan for a girl in Alabama that is now getting her mortgage license and is bilingual, which I am not. I'm married to a man who his first language is Spanish, but I don't know a lick of it.
Yeah.
Um, so she's actually wanting me to mentor her and be an LOA and learn the ropes. And, that's one of the best ways to learn is to be an assistant for somebody else so you can learn the way things are structured. And, we have a ton of programs, and I will say that if Amber or Hannah, if you call them and they don't know the answer, we have the best leadership team that will get us the answer.
Yeah.
We'll find the answer one way or another.
Let me put you on a brief pause. I'll be right back.
Right.
No, just
Or I'll call you back tomorrow, but I'm going to get you that answer.
Yeah.
Just to reiterate that, like the team, it's not just like we're going to work and we work with each other and like our whole team. It's having the support system beneath us gets us to where we are so that we can help the people that we want to help. And it's an amazing system. Like just starting this meeting, our boss was picking on us in the window.
He literally is in the window.
Yeah. And he's just a big goofball. We love him and love the support that we have, here at Alcova. And it's an awesome place to be for sure.
Was that Billy, Rob, or Bob?
Darren.
Who? Darren Bridgers.
Darren. Oh yeah, Darren. Oh yeah. Oh well, he's a hoot anyway. He can make anybody laugh.
Sure. They all are.
Yeah. But Bobby, I mean, I just love 3 a.m. I mean, when I met them, I am very loyal. I don't jump ship just because the grass is greener. I am a true blue, will stay until I'm treading water myself. And being at a company that was a smaller family-owned company, and then they decided to sell to Freedom Mortgage, I could not do it. I said, I got to go. I was there like 18 days. And when I met Bobby, and actually I met Bobby and Rob first, Bobby is the closest person to Jesus that I can imagine. Like,
that's a good way to put it. That's a good way to put it. I love it.
He's just always positive and a good person and cares about every single person he meets. And he put so much into the community that he was almost like a mentor to me. Like I just, I wanted to have a heart like him. And all of the giving and all of the school drive and the Christmas, the Toys for Tots, and it really got me into even more of a giving spirit. And I'm sure being very close to them up there at Roanoke, you really feel it up there.
Yeah.
But you guys should, when it gets time, when they start getting all those Toys for Tots toys, y'all got to take a picture and share it on your social media because people love to see that. And I think we had 10,000 toys last year at corporate. It looks like the toy store blew up.
Crazy time in the hallway of toys.
There was a lot.
Yeah.
I think they just did the back to school drive.
Yes.
I can't believe that's already happening, but
we already started down here. It started yesterday.
I think we start Thursday. Yeah.
Oh wow.
For Franklin County. Yeah. But yeah, I feel like they are the foundation to lift us all up, and that trickles into our borrowers and the people we help. So
they're the reason that we say they're not units and they're family.
Yeah,
absolutely.
They let us have that.
You got it. Well, and so to wrap this up, we'll definitely have y'all back in a couple of months. We'll see how the fall and winter markets are treating y'all. But go ahead, as we're ending, I want you to state the licenses, the states that you're in. So one at a time.
Oh gosh, off the top of my head, I'm gonna have to look that up.
Here, I'll start while you're getting your list up. So me, I'm licensed in my home state of Georgia. I also have Florida, Tennessee, South Carolina, North Carolina, Virginia, Maryland, Colorado, and Kentucky, and then Georgia. Tennessee, South Carolina. Yeah, that's it.
That's it. That's crazy. Okay, I do have mine pulled up.
Right.
I have Alabama and Arkansas, Florida, Indiana, Kansas, Kentucky. There's Missouri. There is North Carolina. There is Ohio. There is Pennsylvania, South Carolina, Tennessee, Virginia, obviously, West Virginia, Georgia, and the newest one will be Texas.
Texas
I
is
have
coming
all
soon.
of that except for Georgia and Texas.
All right. And so did I hear Massachusetts? Or no?
Missouri.
Okay, Missouri. Okay, because I know we recently got Massachusetts, and that was one of the things that was it was a potential deal killer, because if you remember in the beginning of this podcast, I said I started in the Boston market.
Yeah.
And when Alcova was brought as an idea, there were 5 of us branches all at the company that was sold to Freedom. So we were all looking to move together. And when we went up to corporate to visit, they told me, hey, just so you know, we're not going to get Massachusetts. We don't have any plans.
Okay.
If you're coming, you're going to have to get rid of Massachusetts. And I had to sleep on that for multiple days because I had to leave several hundred clients behind, which was devastating to me in my mind, But he gave me a good person to refer them to at another company that he's friends with the owner as well. And now 7 years later, we have Massachusetts. So I was asking because I might be getting that one as the branch and loan officer license, but it's just, I mean, the branch is cheapest. The loan officer license is $500, so it's very expensive.
Yeah.
It's
a lot to keep up with.
It is.
Yeah,
hence why we had to pull up our list.
Yeah, yeah. Well, and when you get more than 10, it's hard to rattle them off. You're like, wait a second, I think that's 9. Wait, which one did I miss?
Somebody will call you and be like, are you licensed in this state? And you're like, I think so.
Yeah. Let me check. Well, and it seems like, everybody's got state caveats, but for the most part, they really follow the same rules. I mean, one thing with North Carolina, they have earnest money and due diligence money. They have, the inspection period. There's certain little caveat. Texas, no cash out. So, and that was one that I'm actually thinking about getting, Texas and Massachusetts. But Texas I've got so many ladies over there that I know from my mortgage moms group on Facebook. And we've got Jennifer Woolsey over there at her Texas branch. And so I tend to just send those over to her because Texas has those wacky rules that I don't even want to mess them up, know? So I appreciate you both coming on today. I know you're both busy, but I appreciate you coming on, having this conversation, and talking over all things mortgage. So we will definitely hit you up, and y'all let me know when you want to come back on, and we'll get you back on.
Okay,
perfect.
Sounds
well,
good.
Thank you.
It's been awesome hanging out with you, Lindsay, and just being able to, if we could help one person out of the video, it's been awesome. Yeah.
And that's what it's about. And so, we make these podcast videos so you can see what a day in the life of a loan officer and how we think. But if there is anything that these ladies can help you with, you can find them by searching Alcova, Hannah Shifflett, or Amber Dowdy. And they are in the Virginia, but licensed in multiple states. So make sure to reach out to them. And you guys know where to find me. I'm Lindsay the Lender, available on all social medias. Everybody have a great day.
Bye.